Most XRP holders think they're prepared for what's coming, but the truth is that the biggest shift in XRP's entire history is unfolding right now, and very few people understand the scale of it. Not because the information is hidden, but because most investors are looking in the wrong direction. They're focused on charts, headlines, and speculation, while the real transformation is happening inside the global financial system that XRP is being wired into. Before we dig into this, take a moment to like this video so more XRP holders get access to real research instead of recycled noise. Subscribe to Blockchain of Ara so you stay ahead of every major shift. And as always, this is not financial advice, just deep analysis based on public information, Ripple documentation, and global liquidity data. Here's the warning most holders have no idea about. XRP is being integrated into a system that does not care about retail psychology. It does not care about sentiment. It does not care about speculation. The system XRP is entering is the same system that moves metals, bonds, fiat currencies, and institutional capital across the world every single day. It is structured, regulated, and designed around one principle: liquidity efficiency. Ripple's leadership has been hinting at this for years. Brad Garlinghouse has repeatedly emphasized that XRP's value will be determined by utility, not hype. David Schwartz has pointed out that the largest shifts in XRP's role happen when global settlement pressures increase, not when the retail crowd gets excited. These public statements paint a clear picture. The next major move for XRP will not begin on a chart. It will begin inside the architecture of the financial system itself. And that is the part most holders are not prepared for, because when the system shifts, it does not announce it. Corridors do not tweet. Liquidity hubs do not create headlines. Institutional flows do not create hype. Real change happens quietly, then becomes obvious all at once. And Ripple's recent network behavior shows that the quiet phase is nearing its limit. Corridor expansion is accelerating, settlement paths are widening, tokenization pilots are advancing, and institutions are beginning to reach the point where delayed settlement is no longer acceptable. This is why most holders have no idea what's coming. They're watching price action, but the real catalyst is the moment institutions stop testing and start relying. When that transition happens, XRP does not just move, it repositions. It becomes part of a system that reassigns value based on necessity, not opinion. The warning is simple. The next phase for XRP will not look like the last one. And understanding that difference is what separates people who are early from people who are unprepared. In the next section, we're going to break down the specific system shift that is happening beneath the surface, how it ties directly into gold and bond market behavior, and why this transition is the reason most XRP holders are completely blind to what's about to unfold. The shift most XRP holders are missing isn't happening on crypto exchanges. It's happening inside the global liquidity layer that powers everything from gold settlement to sovereign bonds. To understand what's coming, you have to understand the system XRP is being connected into, because that system values assets in a completely different way than retail investors do. Ripple has made it clear for years that XRP's purpose is not to replace currencies. It is to connect them. And when you connect markets, you become part of the same value engine that moves metals, bonds, equities, and foreign exchange flows across continents every single day. This is the part of the story most people overlook. XRP is not being positioned inside the crypto market. It is being positioned inside the global liquidity market. Once you understand that, everything looks different. Gold doesn't move based on hype. It moves based on macro stress and settlement demand. Bonds don't move based on emotion. They move based on liquidity rotation and monetary policy. Large-cap currencies don't spike because someone made a YouTube video. They move because institutional flows recalibrate around risk or opportunity. Ripple's entire network is built around these same mechanics. XRP is wired into on-demand liquidity corridors that are designed to operate under the same principles as settlement systems that handle trillions of dollars in value movement. Ripple's enterprise partners care about efficiency, reliability, and throughput, not speculation. When they integrate XRP into their architecture, it is not to chase price. It is to eliminate friction. And that is the warning. Once XRP enters the liquidity engine, valuation is no longer driven by traders. It is driven by flows. Brad Garlinghouse has stated publicly that global value movement is moving toward real-time settlement as an operational requirement. Not a luxury, not an experiment, a requirement. That means every institution relying on slow rails is being forced into a corner. Delayed settlement now carries real cost, real risk, and real inefficiency. And when inefficiency becomes expensive enough, the system shifts naturally toward whatever reduces that cost. This is where XRP comes in, not as a speculative instrument, but as a liquidity equalizer. Here's what most holders don't realize. Tokenization is accelerating globally, and tokenized assets do not behave like digital versions of stocks or bonds. They behave like streaming liquidity. They need instant settlement rails to move between markets, institutions, and jurisdictions. And without a neutral bridge asset, that liquidity gets trapped. Exactly the problem Ripple has spent more than a decade solving. Ripple's publicly shared reports show that ODL usage increases during periods of macro volatility, not during crypto bull runs. That means that XRP's real demand comes from the same forces that move gold and bonds when global uncertainty rises. And right now, those forces are building. Faster payments, higher regulatory pressure, increased tokenization, greater need for liquidity compression. These are the foundations of a systemic shift. The part most holders don't see is how Ripple's escrow and OTC mechanics interact with this transition. Institutions use OTC to avoid disrupting public markets during early testing. But as those OTC channels thin, which Ripple's monthly escrow reports clearly show, institutions will inevitably rely more on open market liquidity. When that happens, public supply must meet institutional throughput. This is the moment where the system forces a repricing, not because retail is excited, not because of hype, but because the liquidity engine requires XRP to function at scale. Most XRP holders are completely unaware that this moment is approaching. They are focused on short-term movement while ignoring the structural shift happening under their feet. They do not understand that XRP is being positioned inside a market where assets are not valued by speculation. They are valued by need. And once the system needs XRP, the asset is no longer priced as a cryptocurrency. It is priced as a settlement instrument. In the final section, we're going to tie this entire shift into the warning itself, the specific change Ripple leadership has publicly signaled, why most holders are blind to it, and why what's coming next will redefine XRP's role entirely. The warning becomes unmistakable when you connect all the pieces Ripple has already placed on the table. Not hidden, not leaked, not whispered, stated openly, but only understood by people who know how to read the system. Ripple's leadership has said repeatedly that the future of global value movement will depend on real-time settlement. What most holders don't realize is that the shift into real-time settlement does not happen gradually. It happens structurally, slowly, then suddenly. The world uses one system until the moment it becomes too inefficient to support the next phase of global finance. And then without fanfare, the new system takes over. That transition is now underway. The newest comments from Ripple's leadership make it clear that institutions are no longer exploring the idea of faster settlement. They are preparing to depend on it. That is the line most holders miss. The moment testing stops and reliance begins. When financial institutions rely on an asset, everything changes. Liquidity requirements rise, corridor volume increases, OTC absorption compresses, and the system starts to price the asset based on throughput, not speculation. Most retail investors expect this change to show up as a price spike, but the warning is the opposite. Real systemic shifts never appear in the chart first. They appear in liquidity behavior, they appear in corridor activation, they appear in settlement patterns, they appear in the shrinking distance between institutional need and available supply. This is exactly what Ripple's data is showing, and it's why most holders have no idea what's coming next. They're watching for candles, they're looking for headlines, they're waiting for drama. All while the global financial system is becoming increasingly dependent on the architecture Ripple built, an architecture that uses XRP as the neutral bridge for settlement. This is why the next phase will catch so many people off guard. Not because XRP wasn't ready, but because the system was, and most people weren't paying attention. The moment institutions transition from testing to operating, XRP stops being valued like a cryptocurrency and starts being valued like an essential piece of financial plumbing. When that happens, the market no longer gets to decide what XRP is worth. The system decides, and the system always prices an asset according to the size of the problem it solves. And XRP is being positioned to solve one of the largest problems in global finance: the need for unified liquidity in a tokenized real-time world. So if you're here, understand this. What's coming isn't a prediction. It's a structural inevitability. The kind that happens whether people see it or not, the kind that rewards those who prepare and leaves everyone else wondering how they missed it. Before you head out, take a moment to support the community that sees beyond the noise. Tap like so more XRP holders get information grounded in research, not hype. Subscribe to Matrix Millionaire so you never miss the signals the system reveals before the chart reacts. And comment one word below, aware, because that is exactly what you are now. Most holders have no idea what's coming, but you do, and you'll be ready for it. Welcome to Matrix Millionaire.